Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to answer a question that comes from one of our viewers, Straight6, and there was a little bit of a discussion that went back and forth on one of our previous videos. And this is the subject about if you are somebody who is kind of perpetually traveling, a digital nomad, spending time in a bunch of countries, not being resident there, but maybe spending 3 months, 6 months, whatever, 4 months, and then kind of going to the next one, or maybe even just a month at a time. Are you taxable in each of those places that you are busy operating and traveling, or how does it work from that standpoint? So I'm going to go through and explain a little bit about how this works, both the theory and the practice in this video. So let's dive into it. Before we do, if you haven't already, please hit the subscribe button, hit the notification bell, the little all notifications, so make sure you don't miss out on any of our future videos. If you'd like help with international tax optimization, forming companies, opening bank accounts, getting residency permits, citizenships in other countries, etc., please reach out to me. Please book a call. There's a link in the description below, or send a message to our websites, offshorecitizen.net or offshorecapitalist.com. Okay. So how does this work? There's kind of two different parts to it from a legal standpoint. And of course, all these things are country by country, okay? They might include what visas that you have, what the local rules are, whether there's tax treaties, etc. But basically, if we're going to go through kind of a few scenarios. So one of them is if there's a tax treaty, right? So this is the first question is, are you resident in a country that has a tax treaty with another country? Okay, that's part one. Number two is if you're on some sort of a visa that has some specific rules, such as a digital nomad visa in Estonia or something like that, right? Number three is if you're not in either of those situations, and kind of then the theory and the practice. Okay, so let's start with tax treaties. Now, the whole concept of a tax treaty, as we refer to them in this case, there's actually different types, but we're talking typically about a double tax agreement, is to avoid double taxation. Okay, in other words, if you're being taxed in one country, you don't have to be taxed in the other. So generally speaking, if you're a resident of one country and you happen to be in another country, you're generally not going to be taxed there, unless you're operating through what's called a permanent establishment, and there's some really specific rules around that. So let's say that you were just a traveler and you're spending a bunch of time. Usually you wouldn't fall under their rules. Now there could be some specific circumstances under which you do. If you're doing certain types of activities, if you have like a fixed place of business, etc. And then what would happen is you'd be taxable on that portion of the income. So of course the concern is, hey, if you're spending time in 8 countries, are you going to have to go through the hassle of filing taxes and worrying about things in every country? If there's a tax treaty, typically no. Okay, it's pretty straightforward, so long as you don't meet the standards of being a resident there and you don't have something that constitutes a permanent establishment. Now, technically, you could constitute a permanent establishment, but usually, if you're not, if it's kind of incidental that you're there, usually that's not going to be an issue. Okay, so it's just kind of, they say, okay, you're paying tax here, so you don't have to pay tax here, and it's reciprocal on the other side, so it works for both parties. Now, some things about this that are worth understanding. First of all, most countries don't have tax treaties with most other countries. Even countries with large tax treaty networks, like Canada has like 92 tax treaties or something, it's like less than half the world, right? The US has, I think, maybe like 47 or something, so a lot less, it's like, a quarter of the world kind of thing. So lots of times you won't have that. Now, in that case, technically speaking, you're not protected. So then you have to operate in a situation where you say, well, hang on, what if there is no tax treaty? So then we operate on the next 2 sets of principles. So the first is, what about specific visas? Okay, if you do a digital nomad visa, usually they have a specific treatment for tax purposes. For example, the Estonian digital nomad visa basically says you can spend up to 6 months there and not pay any tax. If you go over that, you become a tax resident. If you become a tax resident, you're taxable. But if you're under that threshold, no tax. I'll do a video in the future on the Costa Rican program, which is another kind of example of some favorable tax regime. This is becoming more and more common. A lot of countries in the last year and a half or so have started to roll out these kind of digital nomad visas to welcome location-independent business people, workers, entrepreneurs, etc., to their country to spend, some extended period of time beyond a normal, like kind of visitor visa. And they're saying, hey, so long as you're here under that visa and so long as you don't become a resident, it's fine. So in those cases, again, it's pretty simple to know what's going to happen. What about in the third situation? So in the third situation, it's a little bit tricky because you have to pay attention to what constitutes local source income. So quick little recap for you. If you're a tax resident in a country, that country's rules apply to your full worldwide income. If you're a non-resident of a country, then you're typically still taxable, but only on the local source income. And so the question starts to become, well, what constitutes local source income? All right. Now, often this is if you're doing sales on that ground, right? So that's, let's say you were going door to door, something doing sales. Often that would be considered to be local source income. Often if you're providing services there, then that would be something. So it depends a little bit. But if you were a service provider going there, let's say you flew in and you spend a couple months taking care of a client there, likely that would be considered local source income. Again, varies by country, so there's no one size fits all, but you kind of get this general thing. And in those cases, are you technically liable for tax in each place that you do that? Yeah, you technically would be. In practice, that's not really the case. In practice, local source income is pretty much the hardest thing to police, and nobody really puts any effort into policing it. It's just, there's kind of this concept where, like, how do they catch you in their net? And if you're in a country on a tourist visa for, say, 3 months in a year, like, you don't register in their tax department, so you don't get looked at. That's not something that's examined, etc. So unless there's some very specific activity that really draws attention, in practice, it's really not something to worry about. You're really going to be paying tax wherever you're resident, or if there's specific places that the income is sourced from, such as you're earning royalties from somewhere, or dividends, etc., capital gains from real property, maybe if you have a team, etc. But you can even see this with respect to, for example, let's say you're hiring all sorts of, like, a team of people in the Philippines, right? Technically speaking, that's a lot of work that's being done in that country. There's a reasonable chance that that should be taxable, but even in that case, they tend not to go after you. And you can kind of see why they don't do that, right? They want to encourage people, and those people are being paid, and those people are paying taxes. So it's fine. So yeah, generally speaking, if you're traveling around and spending, 3 months at a time, not triggering tax rules, it's usually okay, but it's something to pay attention to. So I hope that helps. If you have any questions, put them in the comments below. Reach out to me if you have, more detailed questions. Follow me on Twitter, and I'm going to look forward to seeing you guys on the next video.